Hello guys, welcome back to another lovely trading video. In this one we're going to be doing a breakdown analysis on JP Chase. We're also going to have one on BlackRock today because both of their earnings are Wednesday, so tomorrow, and they're both big players and are kind of important to be known what's going to be happening with them. So firstly, JP Chase, it's always the main banking one most people look at, for the reason being is they tend to be the most stable. If you go back to the financial crisis, JP Morgan was definitely one of the most stable banks within there. I mean, they weren't at risk of default or anything like that. They were very much, I mean, they were even buying up, they bought up best earns. So they are usually the most stable bank to look at because they are very risk adverse. And that's mainly, I guess, due to Jamie Dimon, their CEO, who has obviously been in the news lately. You've probably been seeing it over his restatement on Bitcoin that he does think it's worthless. So, well, take that what you will, but it's still important to be looking at JP Chase. So firstly as well, it's estimated by analysts to have $3 a share of earnings, which would be just under 30 billion in revenue for the quarter. So obviously the announcement, I think, is around 6:50 has been confirmed for, well, 6:50 in the morning. That would be Eastern Standard Time. For when they'll be releasing their earnings or an earnings call, and we can see kind of how close that is. Also, short interest on it has gone down within the last quarter by down 2.2%. So those are key things we're looking at on JP Morgan, and now we'll kind of go on to the technical side and see what's likely to be happening. So obviously we still have this gap down at around this 102. That's very far off, and I can't see us coming down to this level until the market has some sort of a correction overall. But even then, it's still a bit of a push to get it back down to that level, because even during, if we go back to kind of the pandemic when stocks were at all-time low, even then it didn't go much past there. It had a low of what, $77, and that was obviously a very heavy pullback in the market. So for it to get back down to that level is not really the most likely thing. So that's one thing to be keeping out on with that 103 level, is that it's just very far-fetched. Then for the other levels, we do kind of have another one down at this 125.75 level for a gap fill. We have another one down at 141.25, and it seems like the rest of these gaps have since been filled. So those are the key levels that we'll be looking at on the gap fill side of things. The only one that we'll probably see within, the next 6 months, I would assume, would be the 141. Don't really see JPM coming down to 125 unless maybe actually during when the Fed starts tapering, because obviously stocks become less attractive as interest rates go up, and investors look more, well, tend to go more with bonds when they're more attractive. So that's one thing to be looking out for. But now going on to the standard deviation side of the charts, we can see that obviously JP Chase right now is starting to pull back, and that's for kind of one main reason. On the 4-hour chart, we can see it came into the first deviation. When you see that, most likely a stock will pull back. Doesn't mean it's going to turn into a downtrend, but usually just means you'll at least get a large pullback, and that pullback will usually take you to statistical mean, or at least the half deviation. Since then, we have come back into the half deviation, and it looks like we're going to push down to the statistical mean at around $163. And even if earnings are good and the stock does tend to go up, we will probably hit this price pre-market, just because a lot of volatility will probably come into the stock. And at the same time, it did come into the statistical mean on the daily. So you kind of have those two levels line up. When you do, obviously you're getting selling pressure on the 4-hour, you're getting selling pressure at 2 deviations at one time. So more likely than not, that's when you get the heavy pullbacks, and that's why it wouldn't be unlikely for Chase to kind of pull back to this 163 level. Now, where do we kind of see it going to here? Okay, if earnings are relatively strong and we're going to continue up, obviously we could kind of go up from this 165, but it wouldn't be unlikely to see a further pullback to 163. Now, why do I say that? It's because we've got the statistical mean at 163.50, and then we also have the half deviation at 163.35 on the daily. And what you tend to see with moves is that it tends to pull back to at least the closest deviation, whether that's a half or full deviation is usually at least the smallest amount of a pullback you'll see. And on the 4 hour, we've already pulled back to that half deviation, and it looks like we're going to push back to the whole statistical deviation. But on the daily, we still haven't pulled back to any sort of deviation, so that 163 would mean that it pulls back to the half deviation. So that would be quite likely to see it kind of pull back to that level before continuing up if it's going to. And so that would be kind of the key thing we'll be looking at. But obviously we can't predict kind of what way it will go, because it will be a bit more released on, or depending on earnings, depending how strong their earnings are compared to analyst expectations. So I do see them beating expectations. So right now they're estimated, I think it's $3 earnings per share. But could see it being, I personally see it being a lot closer to probably $3.25 a share. So if it does hit $3.25, then it's probably more likely that it could push upwards, but will depend also, because banks are quite heavily dependent on what the Fed will be doing with bonds as well, because or interest rates, because obviously the banks heavily rely on interest rates as a source of revenue. So yeah, the kind of key level to be looking at for this pullback at least will be 163. Then where do we see it going from there? Depending on earnings, we could see a push down to 155 slash 153 if earnings are bad, or for any reason we continue down. This is where we consider that low risk buy entry, and would most likely see either a heavy pullback to the upside, or a reversal zone. And looking at the last year of data, obviously JP Chase has been nothing but uptrending, so more likely than not, at least relying on the trend continuing where it is, we would most likely get a reversal at that level. Now if it goes up, what levels are we looking at? Retesting these levels, you're always going to get some sort of selling pressure, but as we've already tested them, we're more likely to break through. So 171.50 all the way to around 173. There is probably going to be a lot of selling pressure coming into there, so we may get another small pullback, but we would be looking for the breakthrough of that, and we'd be looking for a 179 would be our key level. The reason for that is on the daily, the deviations are quite wide. As you can see, the first deviation is 153 or 192, and that is quite a wide range, and so that means we would have to have quite an ambitious target of 192. And as you'll see, that actually goes past the third deviation on the 4 hour, which does kind of make the daily chart on JPM a bit useless, in the sense at least looking for upwards targets, because it's very unlikely that we'll push to those kind of levels at least anytime soon. So we would be using the 4 hour to find our price targets, and that would be kind of 180 and 186 would be kind of our key targets for the upside. And obviously you're always going to get some sort of selling pressure at either psychological levels and or even half deviations. Half deviations doesn't mean we're going to get massive pullbacks or anything, but they are an area to always be watching out for, because it could still be a reversal zone. It's less likely, but it's still possible. So that 175 is also a level I'll be keeping on, because 175 will be a key kind of psychological level, and also does line up with that half deviation on the 4 hour, so would not be unlikely to see selling pressure coming in. But I mean, I guess that's kind of the overall breakdown on JPM. JPM is one of the stocks I'm always more bullish on, but that's just because I think it's one of the best run banks. You've got Jamie Dimon as CEO, who I think runs the bank great, very risk adverse while still being able to maintain high profits. So I could see it going up. They always do tend to do quite well on earnings. So something I would be more bullish on if I had to pick if it's going to go up or down. But I guess, yeah, we got targets, so either way, if it goes up or down, we know what kind of targets we're looking at. The only last thing we will have a quick look at is what the market is pricing in for the move, and it looks like traders and investors are pricing in around a $4.50 move on earnings. So if we're right now at 165, we would be looking for a push to around 160, or they're estimating that we could kind of go back to our all-time high of around 170. But I could actually see it being a bit more volatile than that. I do kind of see us hitting either our target to the downside, 155, or the one kind of 75 or 173 within the next week or so. So I hope you enjoyed the breakdown on JP Chase. Hope to see you in the next one, and that's it. Peace.